Good afternoon, everyone, and welcome to Stock Market Today. It's Ali, Coram, and Ed Carson here with a breakdown of the action in today's session, Tuesday, September 3rd. And Ed, we're not starting out September on a really good note here.
No, I wish we could go back to holidays. That was a lot nicer. I want to take a look at Nvidia because that was a clear driver. Also, Freshpet and CyberArk.
Okay, we'll take a look at those three stocks, but first let's take a look at the major indexes. The Nasdaq today getting hit hard, finishing down 3.3% in today's session, followed by the Russell 2000 small caps down some 3.2% on the day. The S&P 500 off 2.1%, and the Dow down 1.5%. The major indexes, a couple of them breaking some key levels and breaking expectations, Ed.
Yeah, there's a few things. And on Friday, the Nasdaq didn't look that great. It got above the 50-day line and it held support of the 21-day line, but it was more like it didn't do, it was still an inside day. It wasn't decisively above key levels. But today was really negative. And I think the thing is that on Friday, the S&P moved into a power trend. It had been up above, hit a lot of triggers that, hit that mark. And the S&P was right at the top of this range and just like 20 points or less from the all-time high. So the thinking is okay, the S&P is going to move to all-time highs and it's going to pull everything else up with it. Instead, the S&P tumbles back. Again, it's not the end of the world, but it went through the 21-day line, testing the 50. And instead of the S&P leading on the upside, you got the Nasdaq leading on the downside. It's just a different mindset. It's definitely a glass half empty kind of thing, and the glass is getting emptier rather than the glass is getting more full. So yeah, I just have to change that mentality going into, because we were expecting something better and really a sharp break, and not really on news. There really wasn't news to trigger this that, at least not significantly. I mean, there's some stuff out there, but nothing that you would say, aha, this is why the market was selling off like this.
It seems like Nvidia, as you mentioned at the top of the show, one of the drivers today, and we can talk about that a bit more here. So the S&P 500, great technical analysis there. The Nasdaq, as you said, it was kind of on the edge there on Friday. Didn't feel too inspiring of a way to end the week, whereas a lot of hopes for Nvidia to come in and save the day, and that didn't happen, Ed. And so now we have the Nasdaq undercutting a lot of the recent action over the past couple of weeks, and now the follow-through day that we saw on the 13th of August, we closed below the close of that day, and it wouldn't take much for us to close below the low of that day, Ed.
Yeah, and that's really important, because a lot of research shows you go underneath the low of the close below the low of the fall today, and that's a really bad sign for the rally. And this didn't just happen. We went up for a while, and now we're sort of rolling over. So it wasn't like it looked like we were making progress. But if you look down there, you can see that. And this is the case with Nvidia and some others. So it just wasn't that much volume on the upside either. I mean, there was obviously some days that close, but nothing that really triggered up. Today was high volume on the NYSE and the Nasdaq. So just a lot of warning signs. What would seem like we were heading towards something really positive, just not looking that way after today.
Yeah, seemed constructive. Now under construction,
Yes.
it seems. So it seemed like today a day for investors to be paring back their exposure especially if their stocks were triggering sell signals and participating on the downside here, Ed.
Yeah, and there were some really big losses, and not just Nvidia. So yeah, you should be doing that and cutting back on exposure, and maybe even proactively too. Like if you're thinking, you know what, I'm not that comfortable. The stock is holding up okay. And there were stocks that were holding up okay in the morning, and then they didn't look so good in the afternoon. So, it's just a situation. If we're going to, if the NASDAQ is going to come back and test the 200-day line or those kind of things, or if the S&P is going to go underneath the 50-day line, a lot of other stocks are going to come through that. I mean, there's things that held up today might not hold up tomorrow, because all of a sudden, yeah, we were like a hair's breadth from an all-time highs. Now we're a hair's breadth away from going below the 50-day line. So you have to be taking a little bit of offensive and defensive selling at this point, probably.
Right. And the S&P 500 for now finding a little bit support ever so slightly around the 50-day and that 5,500 level. But if you get momentum to the downside like you do on a day like this, the expectation now is for further weakness for a couple of days potentially, right, Ed?
Yeah, it's certainly there. And even if we had a good day, unless it was a really amazing day, it would be within sight today's action. I mean, would you be that? Let's say we bounce 1% on the Nasdaq or the S&P. What does that really tell you? I mean, and even that. So expectations that you might go down, and there's not something that would immediately say, "Aha, everything's looking strong again."
Hmm. And we did marvel at the strength of the snapback, but now we might be looking more at a 50% retracement, from the high to the lows. Maybe we're more in the cards for something like that with the NASDAQ. I don't have the exact calculation here, but it looks like we even have more room to go for that. If you're looking at the low from early August to the high from a couple of weeks ago. So that's something else that we like looking at, but we'll continue to take things day by day. Let's talk about RSP, Ed. What are you seeing here with the equal weight index
Well,
for the
that
S&P?
definitely held up better. Obviously, there were some non-tech sectors, not all, but some non-tech sectors were doing pretty well today. But even this one did start falling. It's still 1.3%. You wouldn't, this is not like, oh, but it held up relatively well. That's what you say. But and it's only to the 10-day line. So this is looking a lot better. If this were the market, you'd say, well, that's disappointing, but not the end of the world. Still, if this is your best case scenario, down 1.3, it's not great.
Right. And here's QQEW. This is the equated NASDAQ 100 down 2.4% on the day where the Qs were down 3%. So going back to that mega cap story, now a drag with their outsized weightings.
Yeah, and you can see though the 200-day line is closer with QQEW. It's not far from a test of that. QQEW has lagged so long because
Mhm.
it hasn't had the mega cap strength, so it didn't fall as much today, but it hasn't really shown any outperformance either. That's just continued to slide even when, say, the mega caps have taken a break. They're not taking over.
Exactly. Here's a look at the 10-year treasury yield. What are you seeing with the bond market, Ed?
I mean, it's sort of in a range here. Really, it came down. There was some weaker than expected manufacturing data. Wasn't radically weaker. Construction spending a little weaker, but it still seems to be in a range. It was a pretty big drop today, partly because of safe haven flows, but
Mm.
that seems to be mostly what's going on. We get the jobs report on Friday. A lot of economic data today, this week, with the earnings calendar light.
So you don't think that we can peg the weakness really to the manufacturing data? That's not a big enough of a headline in your
I don't
view,
know. I
Econ
mean,
Ed?
it rose. I don't know. And if you want to look for that excuse, I mean, we rose. The index rose a little bit, just not as much as people expected. But it wasn't like this huge miss. And again, I can see if it would come off a little bit, but I don't know. I'm more interested in the jobs report. I'm more interested in the ISM services index. If you're starting to worry about recession or those kind of things, then that's where it would come in. But I also feel like if that were the case, the Fed would probably be more aggressive. So that would be on the flip side.
Mhm. Okay, let's take a look at SMH because if Nvidia had this domino effect today of driving a lot of the weakness, which it seems like it did, chips definitely in the crosshairs here, Ed, with SMH down 7.5% today. And this is a sector ETF, so that's a very big hit.
There were a lot of losers. Obviously, Nvidia huge, but there was a lot of losers in AI, not AI. The relative strength line, that's undercutting the August 5th lows or right at it. I'm not sure exactly, but right at those lows. So even though the index isn't at those levels, really,
Mm.
really struggling. And this was such a leading index for so long. I mean, it is not anymore. It may need a lot of repair work. We'll talk about with Nvidia, but this, it's starting to look like it could be a substantial amount of time before this really goes on another run.
Mhm. Let's take a look at IGV. This represents the software sector down 2.2% today and right at a key level here, Ed.
Yeah, it looked like it undercut a little bit, not decisively the 50-day and 21-day line. It looks like a little weaker version of the S&P, honestly, and that's a pretty good sign for a tech sector like that. It looks a lot better
Mhm.
than the other things, and that the relative strength lines held up okay.
Mhm. And ITA, this is the Aerospace and Defense ETF, which has been looking good, but today down 3.5%.
I want to just bring it up. It's still look. I mean, look, it's only 21-day line. It's been moving up. It's just that there were some pretty sharp losses that had nothing to do with AI.
Yeah, well said. And XME, this represents the metals and mining, really falling apart here, down at 6% on the day, Ed.
Yeah, some big losses for copper and silver and probably some energy things too. Relative strength line has really
Mhm.
been weak.
Yeah. So to your point, not just AI, even though Nvidia perhaps a big catalyst for the action today. Which, speaking of, let's go there. The AI leader here, is it going to keep its leadership crown? We did see another quarter of triple digit growth last week for Nvidia, Ed, but the reaction was not positive. And do you think that perhaps investors digesting the news a little bit more over the long weekend, deciding that maybe it's time for a break here? Shares down 9.5% ultimately on the day. I luckily was selling this within the first 10 minutes to an hour of the day. So got out before the selling really ramped up.
Very good. Yeah, this one, on Friday had sort of a pretty lackluster move. When the market
Right.
came up, it didn't get back above. So even then, you could see that, the relative strength line was still weakening that day.
Hmm.
And today, last week, I think it fell like 7.7%. So it was a pretty bad week. And so then to follow up with, a 9.5% drop, a huge one-day percentage loss. Now the market cap loss, something like 278 billion. I didn't look at it, but it's the biggest one-day loss in market cap for any stock. I think Meta in 2022 had a bigger loss. Now that was a horrific percentage loss. This one's only 9.5%. This one may need a lot of work. Maybe the 100 area can be a support area in some vague fashion, sort of like it was in early August. I mean, that's sort of where it was closing around. But maybe this one needs a lot of work. Margins came down a little bit in that earnings report. I think people are just looking ahead. Can it really be sustained? Again, there's a lot of great things about what Nvidia has been doing, but clearly there's technical concerns. A lot of heavy volume selling on a daily and a weekly chart. You can see the
Hmm.
volume is much higher on the downside, both before the August into the August sell-off, and now in the late August, early September sell-off, much higher volume than on the upside. So yeah, I mean, this has been the most important stock and company of the market. So if this one struggles, it's not a great sign for the market unless you really shift over to some other kind of leadership, and that that's we're trying to transition, but it's hard to get insurers and others. Those though, the $3 trillion market cap is hard to replace. Let's put it that way.
Right. No doubt a major sell signal here today. But to your point, even last week, it wasn't looking good. I think position traders maybe wanted to give it a little bit of space, given with where it closed versus the 10-week by the end of the week. But clearly today, decisively below that key level, Ed.
Absolutely.
And I'm about to cough. So do you want to talk about Freshpet?
Freshpet wasn't looking so fresh by the end of the day. I mean, but that can tell you, this one had a really strong open, and even when the market was picking up, it got back above the buy point clearly, back above the highs from last week. Really looking strong here, and then it just faded away because it's in the market was selling off, and it still rose. The relative strength line is right around the highest levels of this consolidation, probably a couple of years. But that's just something else. It is nice action in some ways. Just generally, you can see there's been some positive volume bars. The fundamentals look strong. So there's a lot to like about this name. It's just that it shows you in this kind of market, or at least right now on a day like today, it's hard for anything to withstand that kind of selling pressure.
Absolutely. Okay, we'll continue to keep an eye on it and focus on the weekly chart in addition to the daily chart here, Ed. Okay, last on our list, let's go to CYBR. This is CyberArk software, a mild decline to kick off the week. So it too is hanging in there relatively well for the time being.
Yeah, and this one, unlike Nvidia, had at least some positive volume bars in there, like right early on, and then again, when it made when it tried to move out to new highs a few days ago, and it did break out. Today it went back below the buy point, but honestly, not too bad, basically in line with the S&P. So this is pretty positive out, relatively tight. I mean, I don't want to be doing anything with this right now, but see what happens, because maybe tomorrow the software names, because software names did relatively well today. Maybe tomorrow's software will be a big loser. You don't know, but you want to look at some of these names. There were a number of software names that maybe came back below buy points, but are
Mhm.
still looking relatively strong. Again, I think in general, you want to be looking for sectors that are holding up, showing some relative strength, holding key levels, not necessarily, I mean, this may be temporary. Maybe in a day or two, the market will get going again, and you want to be watching these names for that reason, but it's not really something that you're seeing like, oh, I want to be going out
Mhm.
there and buying stuff.
Totally agree. Makes a lot of sense there, Ed. All right. Well, that is it from us for today, everyone. But be sure to keep tabs on investors.com. This is where we have all the latest stock market news and analysis. And we'll be back tomorrow morning with more on IEBD Live. We'll have the breakdown of the market action in real time once that opening bell rings, and the team will give you their thoughts, our thoughts on how to position your portfolio as the market breaks expectations. So we'll have to see how we open tomorrow, and more importantly, how we close not only tomorrow, but for the rest of the week. So thanks everyone once again for tuning in. We'll see you on IBD Live, and then we'll also see you right back here tomorrow after the close.